Here's what's coming up on the program today. Global ratings agency Fitch downgrades Ghana's borrowing capacity to restrictive default. South Africa Reserve Bank set to adjust interest rate modeling tool. International Energy Agency says electric vehicle sales hit over 10 million in 2022. Hello and welcome to Business Incorporated. I'm Will Ebong. Now let's check in on the markets. As always, we start with Africa, where sentiments were mostly negative at intraday. However, Nigeria was up more than 0.5%. It's back to the 52,000 level, while South Africa inched lower by 0.2%. Up north, Egypt's EGX is open today, however, with negative sentiments at intraday. Kenya closed Tuesday's session in negative territory. Now we zoom in on major stocks in the Middle East, where it's looking good at intraday. Market sentiments were mostly positive. We saw the Abu Dhabi index up 0.28%. Dubai, however, was down 0.46%, not so great there. Now still within the region, Saudi Arabia was up 0.31%, while the Qatari index was up strongly in positive territory, 1.43%. And now in the EU, a corporate takeover is making waves in Germany after a privately held manufacturer of heating and cooling equipment was sold to the US. Lars Alter is with Deutsche Welle and joins us from Berlin. Lars, what can you tell us about the company and that deal?
Yes, thanks for having me. The company we're talking about is called Viessmann. It's been around for over 100 years, and it manufactures air conditioning and heating systems, the latter reaching from photovoltaic and biogas to heat pumps. Now, this last one, heat pumps, is the company's strongest business, and that part was now sold to Carrier Global, a Florida-based manufacturer of air conditioning units. Carrier is paying $12 billion for Viessmann and calls this deal a game changer for the company. There's some good news for the 11,000 employees in Germany. The sale of the company comes with certain job guarantees and even with a bonus payment shared by the employees.
Now, this sounds like one of many corporate deals. Why is it significant?
Well, that's because in the current political environment, you have to look at heat pumps as part of critical infrastructure. After all, we're in the midst of an energy crisis. A little bit of context here. When Russia started its war in Ukraine, Germany stopped buying natural gas from Russia. And ever since, we've been looking for alternatives, not only to generate energy, but also to heat homes. Gas heating and oil, for that matter, are on their way out, and heat pumps seem to be the preferred way to go in the future. So having leading technology in that sector is important for Germany. And while there are two other large companies manufacturing heat pumps, Viessmann is certainly the kind of company you don't want to see move away in times like these. Of course, they're not moving out of Germany entirely. In fact, Viessmann has recently invested more than €1 billion locally, including building a new production plant in Poland. But still, control of the company's technology and strategy is now in US hands. And selling out of such critical infrastructure is something that Germany has seen a few times in the past and identified as a real long-term problem.
That's an interesting development, but how have politicians and investors reacted to this story?
Well, many politicians have voiced their dismay. One of them is the opposition party's economic policy speaker. She says that Viessmann is one of those companies that could play a crucial part in the German energy transition, a key project for Germany over the next couple of years. And she says it's unfortunate that a company like this is moving away. The market's perspective, of course, is a little different. Shares of Carrier initially dropped in the US a bit after takeover was announced, but that's what usually happens in such cases. But in the long run, analysts expect Viessmann's business to grow due to access to much more capital as part of the Carrier Group. However, when it comes to growth, while Carrier says they want to drastically raise production output, many in the business say that the mass market is already dominated by some Chinese and Japanese brands.
Thanks so much, Lars, for that update. We'll keep track of that development. Thanks so much. Now let's take a peep into the UK, where the scandal of business lobby group, the Confederation of British Industry, is still fanning flames, and the CBI president, Brian McBride, has had to step down. Tenny Olaoyetayo, our correspondent in London, joins me. Good afternoon, Tenny. A new CBI boss starts today, even as the sexual allegation crisis continues. Do you think the change in leadership will elicit the trust of businesses and individuals again?
Hi, Will. Of course, that's certainly the goal. But whether it will work, we'll have to wait and see. Speaking just over an hour ago, the CBI boss, Rain Newton-Smith, made a public statement addressing women who felt their claims of sexual assault were not taken seriously by the organization, and actually apologized to these women who she said have been let down by the business group. But it's going to take more than an apology to overcome the huge sexual misconduct scandal, which has led to dozens of high-profile members, including John Lewis and banking firm NatWest, cutting ties with the business. So she has a major task ahead of her in ensuring the survival of the business group. There's been mixed reactions to her appointment. She is a former employee and executive board member. Some have questioned whether she's the right person to lead the organization through the scandal, and if she has the ability to bring a new approach to the business.
We can only watch and see, Tenny, if that would work out, if she's capable of handling that position now that a lot of companies, you know, Aviva, BMW, you mentioned top firms that have quit the organization at the moment, but we'll see if she can woo the businesses back into the group. Now, it's looking like Amazon could be forced to recognize a trade union in the UK for the first time. And this is coming after weeks of campaigning and 14-day strike. I think that paid off. Don't you think?
Oh, that's right, Will. It's looking like that could happen after the GMB union, an organising and campaigning union for all workers, said almost 700 Amazon workers in Coventry are now its members, which basically qualifies them for recognition by law. So the GMB has written to Amazon asking the company to recognise them. Now, if that's successful, it would mean Amazon would have to negotiate with workers about their pay, holidays and sick pay. Like other workers in the UK, as I'm sure you know, Amazon workers started protesting about their pay last August, but their first ever strike was in January. Since then, the company has increased its minimum starting wage to between 11 and 12 pounds an hour, but the union is demanding an increase to £15 an hour. So we're likely to see Amazon recognising the workers' trade union as the dispute over pay continues, Will.
These unions say they don't want any penny increase. They need something really significant. How are the markets doing at intraday?
Well, the markets, the all-share index is down by 0.31%. The UK's blue chip index made a stronger than expected start to trading. That's as encouraging updates from a number of companies helped offset concerns over US banks. However, that was not enough to push the FTSE 100 into positive territory. Unfortunately, it's down 0.25%. The FTSE 250 is also down by 0.06%. In the currencies market, the British pound is trading up against the US dollar by 0.45%, and the pound is trading down against the euro by 0.11%, but it's trading up against the Japanese yen by 0.24%.
Thanks, Danny, for that update. We'll keep track of how the markets react to all the news that's coming into the UK and see how investors play with their money. Now, over to the Asia markets, where stocks were trading mixed on Wednesday after banking fears were reignited on Wall Street. Investors were also watching Australia's inflation numbers for the first quarter of 2023, which slowed to 7% year-on-year, down from a 23-year high of 7.8%. In the previous quarter, the S&P and ASX 200 was down marginally to close at 7,316 points. And in Japan, the Nikkei 225 fell 0.71% to end the day at 28,416 points. South Korea's Kospi was down 0.17% to close at 2,404 points after the country's consumer sentiment index for April rose to 95.1 compared to 92 in March. Now, mainland Chinese stock markets ended mixed, with the Shenzhen components up 0.32% to finish, and the Shanghai Composite closing 0.02% lower at 3,264. Hong Kong's Hang Seng Index climbed 0.7% up, while the Hang Seng Tech Index rose 1.32%. Now, U.S. stock futures were mixed on Wednesday morning as big tech earnings began to roll out, led by Alphabet and Microsoft, beating expectations. Futures tied to the Dow Jones Industrial Average were down 0.02%, while S&P 500 futures added 0.3%. Nasdaq futures also gained 1.2%. Now, let's see how stocks performed yesterday with our correspondent, Maria Bird.
The U.S. stock market tumbled on Tuesday as the Dow Jones was down by 1.02%, the S&P 500 down by 1.58%, and the heavy tech Nasdaq down by 1.98%. Many investors are still concerned about the banking industry as companies like First Republic Bank reported earnings that caused the stock to slide on Tuesday. This could be something that we see toward the end of the week, not being able to recover, and many investors will be watching to see what the rest of the earning reports come out from many of the other U.S. banks.
Now, oil prices rose in early Asian trade on Wednesday after a U.S. trade group reported a significant draw in crude oil stocks ahead of the government's data release. Brent crude rose by 0.2% to $80.93 a barrel. U.S. West Texas Intermediate crude rose 0.3%. Market sources say, citing American Petroleum Institute figures, say U.S. crude oil stocks fell by about 6.1 million barrels in the week ended April the 21st, while analysts had expected crude inventories to fall by about 1.5 million barrels. Gasoline inventories also fell last week, while distillate inventories rose. Official stockpiles data from the U.S. government is expected later today. Now, we'll take a break now. More stories from the African continent. Do stay with us. This is Business Incorporated. Welcome back. Now, 2022 remained a record-breaking year for venture capital in Africa by deal volume as it maintained a 3-year accelerated growth curve in capital deployment. While capital invested into African startups faltered slightly, the total amount raised remains relatively stable in 2022 and maintained a record set in 2021. What's keeping this trend up? Nadia Kwasi Koulibaly is head of research at the Africa Private Equity and Venture Capital Association, AVCA, and she provides more insights. Good afternoon, Nadia. It's good to have you on the program. Nadia, could you unmute your mic, please? Could you unmute your mic?
Yes, can you hear me?
I can hear you loud and clear now, Nadia. It's good to have you.
Okay, cool. Thank you.
Now, Africa remains one of the fastest growing venture capitalist markets globally. Can you tell us why this is, despite the largely unfavorable macroeconomic climate we're seeing?
Yes, sure. So we have this strong performance at various reasons. So the first reason I would say is the fact that Africa was and continue to be one of the fastest and growing capital market because of its relative infancy youth, right? Because to date, Africa's share of the global pie was still small, so 1.2% of the total value of the global venture funding in 2022. So the continent has more ground to cover than other emerging market or developed market like Europe and Asia. Another reason is the high investor confidence and interest on the continent, therefore has a greater impact than it would have been in other regions as the baseline starting point is different and relatively low. Another reason for the fact that Africa is, still the fastest growing market lie in the configuration of its ecosystem, which is driven by deal at the seed stage. So seed stage deal were also the largest market segment in 2022, demonstrated a growth of approximately 50%, and notably this seed investment led by African investors, which invest at smaller ticket size. So we expect, because of this, that deal at this stage had a higher degree of insulation from the global market headwind and thus contributed to the acceleration of the deal activity on the continent last year. Moreover, I would say that greater investor confidence also in the early stage. So we have a steady state and early stage. So at the early stage across Africa, this segment attire more attractiveness from investors. Series E and B grew approximately by 25%, so with an increased median deal size in the bracket of 10 million, which is the highest median deal size across the globe.
That's quite interesting. Now, looking at AVCA's Venture Capital in Africa report for 2022, West Africa attracted 30% of venture capital deal volume in Africa. You mentioned that earlier, and Nigeria driving 22% of that. What do you think are the key parameters used by venture capitalists when deciding where to put their money? Because I saw a lot of different factors that were considered in that report.
Yes, so I can, just to give you a few factors, so I will give 3 ones. So the first one, I would say the market size and the potential. This is a key factor for investors. So this is also what makes Nigeria attractive, for example, home to approximately a fifth of Africa's population. So highest performing sectors like financials is driven by digital banking service, where the market potential across the continent is 300 million people. So the opportunity is there, the opportunity to establish a presence also in multiple markets across Africa contribute to this. For example, we have seen multi-region deals accounting for the highest value of investment at 35%. The second reason, I would say, a more favorable regulatory environment. So well-articulated policies and regulatory environment create greater investor confidence and certainty. And for example, let's say the Nigeria Startup Bill serves as an important framework in Nigeria to create an enabling environment with input from the private sectors and also bridge engagement gap between private and public sectors. Let's see also the Egypt case. So back in 2017, Egypt enacted an investment law which opened the startup ecosystem in Egypt to investors by safeguarding investor interest. So in the 5 years since then, there have been an impressive increase in venture capital deal volume in Egypt. And let's say the third reason I would give you is, as I was mentioning before, the national market in Africa. So many startups are providing novel solutions as African communities' interaction with global markets continue to change, and exhibited in sectors such as the consumer discretionary, where e-commerce is a driving force behind the growth of the industry. So tapping in more digitally connected population.
And that's quite interesting. Now, in your report, venture debt, that's something I saw that's quite interesting, accounted for about $1.3 billion out of $6.5 billion of funding inflows into Africa. Now, with the Silicon Valley Bank in crisis mode now, how much impact do you think this will have on venture debt raised by startups in Africa?
Yes, so I would say while venture debt is being used with increasing frequency in Africa early stage ecosystem, it remains an emerging trend on the periphery rather than a key component of the African investment ecosystem today. So this is likely to change, of course, as awareness of the advantage of venture capital become better known to entrepreneurs. But the uptake of venture debt in Africa also leans on more towards startup raising mixed instruments, so equity and debt rounds rather than exclusive debt rounds. So the Silicon Valley Bank crisis does, as I think, minimal bearing in Africa, given the nascency of the venture debt integration and the fact that debt is raised in mixed instrument round, as I was saying previously, where, yes, the debt component is most likely provided by private credit fund managers or local financial institution and not large international commercial bank like Silicon Valley Bank. So.
We do hope the crisis doesn't filter into startups in Africa, because trying to raise money through debt instruments is quite difficult these days, especially with rising interest rates. And with specialized banks like the SVB in crisis, that might be making it more difficult for startups who don't have venture capitals, investing capitalists investing directly into their firms. Thank you so much, Nadia Kwasi Koulibaly, Head of Research, Africa Private Capital Association, for joining us this afternoon. Now, global ratings agency Fitch Ratings has downgraded Ghana's long-term local currency issuer default rating IDR to restrictive default from CCC. It has also downgraded to CC from CCC and subsequently withdrawn the issue ratings on 5 local currency bonds issued prior to the domestic debt exchange. Fitch attributes the rating action to missed payments on some of the local currency bonds issued prior to the domestic debt exchange. Meanwhile, following a meeting with representatives of individual bondholders and pension funds, the Ghanaian government announced that it has reached an agreement on a pathway towards the settlement of the outstanding debt obligations by April the 28th this year. Now, South Africa's central bank says it plans to introduce a raft of changes to modeling that informs monetary policy decisions, including a measure to better anchor inflation expectations from July. According to the central bank, the changes, which is the first major improvement to the quarterly projection model in 6 years, should enhance its forecasting ability while reducing the application of judgment and thus potential sources of bias in forecasting. The changes to the model would include a mechanism to account for fiscal policy actions in a systematic manner, distinguishing between private and public wages, accounting for changes in fuel and electricity costs that often spill over into core and food price inflation, among others. Now, electric car sales have jumped to more than 10 million last year, with China accounting for roughly 60% of the market. That's according to the International Energy Agency, IEA. The record sales figures contained in the IEA's Global EV Outlook for 2023 continue a trend of sustained growth for the industry. The figure, which is 10 million EV sales worldwide, exceeds the total number of cars sold across the entire European Union and is nearly half of the total number of cars sold in China in 2022. In total, IEA says more than 26 million electric cars were on the world's roads in 2022, which represents a 60% increase compared to 2021. And that's it on Business Incorporated. Do stay with us tomorrow for another edition. I'm Willie Bong. Thanks for watching.